I'm so glad you brought this up. This is one of my personal pet peeves. No, I hate to tell you this, Dennis, but there's still operators out there doing this. And I want to add more to what you just said, just because I really need your audience to get this point. Just because you see distributions come in on a monthly, quarterly basis, that does not mean that the deal is going well, okay? What should happen is you should only get distributions from cash flow from operations, okay? This is a business with real estate attached to it. You don't pay out of your own treasury. You don't pay out of money that you raised. It should only come from making the result of it should only from business income. It should only be from money that you collected from rent minus expenses, okay? So what operators might do is they'll overraise and they'll tell you, oh, we're being conservative by keeping leverage down. We mentioned earlier, these value add deals have a lot of turnover and you might not, and the cash flow is not going to be very stable. And as a good operator, you want to build up those cash reserves so that once you start making distributions, they become consistent instead of, oh, for the sake of, we want to look good in front of investors and we're going to start distributions in month 2, month 3. No, even though the cash flow is not stable yet. And you don't want to do that to appease your investors and then spending down your reserves and then having to issue a capital call like a year from now or whatever the situation could be. And so investors, please be careful. Make sure, and one way you can find out is look at the financials to see if it even supports the cash flow or the distributions rather.
Yeah, that's such a great point. I always tell investors that it's almost better to sometimes see in a deal no distributions than a deal that has suspicious distributions.